Eric Bro.
What's up, guys? Woods here. I want to bring forth a quick supply and demand lesson. This is going to be a very, very quick, straight to the point lesson. I want to show you guys how I identify my supply and demand zones. There's multiple ways to do so, but this is just one way that I've been doing it for the past few years. I'm going to bring it on this Ethereum chart back in 2021 on the run up to all-time high. There was really good demand zones that printed on the 4-hour. So what I'm going to do is I'm going to bring the replay button back to, let's say back to around here on the 1-day. And then we're going to bring the chart down to the 4-hour, and we're going to just make it really clean and easy to realize for you guys. So I'm going to explain how to identify a demand zone first and how I would play it, right? There's multiple ways to identify demand zone, but this is just one way that I do it. So we're going to just kind of look at price and see what it's doing from here. And we see how price impulses up from here, breaks the high, impulsively breaks the high, comes down to retest, and impulses out of this zone, right? When you scroll in to this demand block right here, there's going to be a impulsive break and an impulsive move up, thus leaving your demand block down here. So people are interested in putting their entries around the demand block. So what are you going to do? How you would play this play is, if you're interested in playing this demand block right here, is you would open up your rectangles, draw your rectangle over this demand block, and be ready and willing to put your entries at the top end of demand all the way down to the bottom end, obviously weighing your bids towards your risk appetite. So small to the top, heavy to the bottom, and you would do it just like that with your invalidation about the size of the demand zone is how I like to play it. So I would measure this demand zone, and this would be about a 1%. I like to give myself about a 2% invalidation there, so I'll put my stop loss about 2% under my heaviest bids, so it'd be around there, and we would just wait for price to come back. And the beauty about playing supply and demand zones on the 4-hour is this is all it takes. So now we just have to wait for price to go, and we would play it from there, and price would come down, strike this demand zone beautifully before reversing back up. So we see this reaction right here, and you can see for about 1 day and a half, price chopped around this level. We're already in it, and we're holding it. Right? And this is what you want to see as far as a reaction from a demand zone. Right? We put our heaviest bits to the bottom, lightest bits to the top, or you can weigh it how you like. That just depends on your risk management. This was a beautiful demand zone because it was 1%. So like I said, that invalidation, I like to do even or 2x plus 1.5x depending on what the specific demand zone is that you're playing. And this one, like I said, was a 1.1, 1.2% demand zone. So I would just kind of do a 2% validation below that. And I mean, we would have more than enough room. It would be a beautiful entry. We would chop around above it for a little while before impulsing up, giving us a beautiful move up. 12. We obviously talked about this example. We have the reaction from that. We secured profit along the way, moved up our stops. We're risk-free right now. And if you're looking for strictly supply and demand, if you're looking for a more higher convicted entry, you're going to look at the 4-hour demand zones. You're going to look at the more higher time frame demand zones. You can play the lower time frame. You can do 1 hour, 15 minute, 5 minute, 30 minute, 1 minute, whatever your heart desires as far as supply and demand goes. But the higher the time frame, the more conviction you're going to have in the play. And that's just the nature of the beast as far as the market goes. So we're going to be explaining 4-hour today and these demand zones and how you would play it. What you want to do after that is all up to risk management as well as invalidation. I explain it the way that I do, and I explain it the way that I would do it, but invalidation is completely up to you. So we see on this move up, we're looking for a demand zone. We're looking for something that piques our interest, and this move up here piques my interest. Why? Again, impulsive move up, followed by a little bit of resistance, push the price down. If we're willing to purchase on this pullback, which is the reason why the price explodes off this block, thus creating your demand zone. Right? The demand zone is created once the closure above the demand zone comes, and then you get the impulsive move up. So if you're anticipating this demand zone, another way to play it is you could enter on this break and close or this push up anticipating it. That's the risky way to go about things. The way that we're doing it is what? We're going to take out our rectangle. We're going to draw our box, give ourselves a level that we're interested in bidding. Then we're going to place our bids in this box, smallest to the top, heaviest to the bottom, or weigh it how you would like. You could do equal bids. You could do heaviest to the top, smallest to the bottom if you'd like to, but that kind of defeats the purpose. So You would play it how you would like as far as you bidding the demand, and you would measure the demand zone for your validation, because that's what I would do. 2.2% is the box you're bidding, so it is, a little bit loose of an area. Not the loosest, but this is a good demand zone. When I'm playing a demand zone on leverage, I like to look for about a 1 to 3% demand zone, but it could be larger, smaller. Your invalidation is going to vary depending on the how loose the demand zone is. And we'll play about, I would say a 3% stop is perfect for this type of play. Do something like that. And just kind of see how it goes. Okay. Bam. We got a nice fill. We didn't get a full fill, but we got a nice fill, right? Because we would have had our heaviest entry to the bottom. And this is all hypothetical, so this isn't exactly how we would have our entry set. Obviously, I would have probably a good amount of bids here, about 10 bids in this one area, 10, 20 bids, depending on how I want to play it. And you see we would get a nice solid entry and a solid immediate reaction out of this demand, which is exactly what we want to see from the 4 hour. The reaction previous reacted how it did for a reason. Why? Because we just broke out of a range and we were just retesting the first sign of demand from that range. Okay, now we have a more conceivable move up and people are willing to buy, and they're stepping in clearly based off this reaction. Move up stops, take profit, let more PA develop from there. Right. So now we're just going to keep looking for areas as I'm putting my mind, remember guys, I'm putting my mind in the view of I'm just looking for demand zones, right? This is a move up. It's an uptrend. We're not necessarily looking to play supply just yet. I'm going to explain that later on. This is where we're looking to play demand zones because now we're in an uptrend. We're not necessarily looking to short. Obviously, there's some scalp opportunities in the mix and this, that, and the third, but we're focusing on demand because we assume price is going to go up. We want to bid the demand level where people are interested in bidding. That's where the safety net is. That's where you can put more conceivable entries. And when you're a demand trader, this is where you're interested in playing. And that's just how we look at the market. Like I said, you can do hourly, you can do 15-minute, 30-minute, 5-minute, 1-minute demands, whatever you want to do. That's on you and your risk appetite. But we're looking at the 4 hour because the 4 hour is going to be your more convicted entries as far as time frame goes. Obviously, the 1 day, you'll have a lot more conviction there as well. All right, and as a demand trader, we're looking for demand zones on move up. Obviously, the higher the time frame, the higher the conviction. So I'm looking at the 4 hour. You can play the 1 hour, you can play the 15-minute, 30-minute, 5-minute, 1-minute, whatever your risk appetite calls for. Make sure you manage your risk. I'm looking for the 4 hour because, like I said, the 4 hour you get more conviction for the trade. When you're trending up like this and you can catch a 4 hour demand zone, that's where you're gonna put size, right? As a demand trader. So what do we see now? After this demand zone, we're up about off this demand zone alone. Okay, we've secured profit along the way. Our stop loss is way into profit, and now as a demand trader, we're looking to add onto that position. Where are we looking to add? Well, we see a fresh demand zone print right here. We got an impulse to move up, followed by a little bit of resistance to push the price down. People willing to purchase the pullback right here, thus impulsing the price up. And now, where are you looking to bid? You're looking to bid right into this demand zone right here. So you're going to pull out your rectangle, just like we did before. And we're going to lay our bids within this box. This is our level of interest. We pick this out. We don't have anything else on the chart. This is our level of interest. We know if price comes here, this is where we're bidding. So what are we going to do? We're going to measure the box. It's about a 2.2% demand zone. That's as good as it gets. I like to look for about a 1 to 3% demand zone range. Obviously, there's going to be a little bit less ones you'll play. There's going to be more you play depending on time frame. And you're going to evaluate your risk and invalidations based upon the DCA range. So what I like to do, just like I did there, I like to give myself about an equal or a little bit more of an invalidation. So for this, I'll give myself about a 3%, because it's a 2.2% range to bid. And again, we're going to put a little bit towards the top, heaviest towards the bottom. And we're going to just allow price to develop and see what happens from there. Because remember, this is all you're doing. You're looking for the demand zone, placing your bids, and you're just relaxing. You're cooling it. Now price retests beautifully, and you get an instant reaction out of that demand zone. This is the exact reaction you want to see, especially in an uptrend. You want to see that demand zone retested and an immediate impulse. This shows you that people are willing to buy on this pullback. People are looking at that demand zone. People are bidding that demand zone, and it's holding. That's the reaction you want to see. especially coming from a 4-hour demand zone. And now what I want to do is I'm going to speed this up and allow price to develop and show you how that demand zone reacts in the future, because now you've realized how to play and how to identify the demand zone. So how does that demand zone react in the future? Because demand zones are going to give you reactions in the future. So now if that demand zone retests again, it's not technically valid like it once was. When it's a fresh demand zone, you have people putting in fresh bids to buy, right? So those bids are fresh. They're not bought up yet. When that demand zone is tested again, you're not going to get the same reaction. You could get a good reaction the first time the demand zone is tested. You could get a good reaction the second time, a good reaction the third time. The more times it's tested, the least likely it is to hold. In general, like support or resistance, you want to treat it like that. The more times the supply or demand tested, the least likely it is to hold. But that fresh test is always going to be the best test more than often, usually. So I'm going to speed this up, let price develop, and then come back whenever this price reacts around this demand zone, and I'm going to show you exactly where this demand zone leads off to, and then I'm going to pick off a few different demand examples. So Ethereum from here is going to leg up a little bit more, and then it's going to reject around this level. And you can see from our point to the top, that's a 39.6% gain. And you can see the price cascades down, front runs our level again before giving another relief. So clearly our level of interest is nice as far as an area. Remember, you're never going to always catch the Pico. So, I mean, area-wise, it's a beautiful level. You can see this is an area that is getting defended and is getting bid. So, I mean, it's clearly an area of interest. And now we're going to just chop around here for a little bit before eventually cutting through this demand zone. And I think this is just a clear, important reaction to show you guys, because you want to know how to play around the level. So intraday, when you're looking for an entry, and let's say we're playing around the demand zone here after we've already had a successful trade, you can use it as a good point of reference. Well, eventually the price is going to move up after retest this little clutter of demand. I'm not going to really explain the demand zone that happens there. I want to explain the reactions first. So you can see we came down, retested, held, came down, sliced through. The moment a demand zone sliced through, you can consider it invalid. So now this is an invalid demand zone. Technically, off of the first test, it was invalid to play. But now that it's sliced through, it's completely invalid. The reason it's sliced through because people pulled their bids, right? That's the reason it's going to slice through, because there's not sufficient amount of bids there to hold the price up. And it looks for liquidity, sweep, before continuing back up. So you can see the price is going to cascade further and chop around this demand zone. So like I was bringing up, if you're playing this level intraday in the future, you're going to create yourself a nice point of reference. So you can see how price just chops around this demand zone. This is going to be a good point where you can decide whether to go short at the top end or to go long at the bottom end whenever that flip comes. And you can see eventually the price will come back up and it will flip this point right here. Yeah. So the reason I wanted to show you that again was just to give yourself the confidence in drawing your levels and playing it as a good point of reference. Whenever people are looking at the same thing you are, odds are there's going to be a reaction from that level. So you can see the flip up from this level comes, and now we're going to be looking for more demand zones, right? Now we're looking for another leg up. We're looking to play nice demand zones, and we're going to start off right here. So we get an impulsive move up, followed by a little bit of resistance in the price, followed by people willing to enter right there, which is the reason why the price impulse is out of that level. And then it comes down to retest. It should come down further to retest one more time before continuing back up. And we got a clean demand zone right there. Beautiful retest. A nice 12% gain. Not sure exactly how high this demand zone goes specifically, but I know there's a lot of good demand zones that come after this level. We're just going to let a little bit of price develop there. We didn't retest our demand zone there. And remember, we're keeping on the 4 hour because we want to keep it want to keep it high conviction. So bam, these are the levels we're going to be looking for, right? So we get an impulse to move up. Beautiful. This is what we want to see. Impulse to move up. We're in from this level. Demand prints. Impulsive break comes after that. Now we have a clear level to bid. So what happened there? Impulsive move up, followed by a little bit of resistance, put the price down, followed by people willing to enter around here, which is the reason why the price impulses out of this pocket, thus creating your level of demand. So what are you going to do? You're going to bring out your rectangle. You're going to draw your level, because now this is your level of interest, and you're going to measure it. This is about a 1.1, 1.2%, just like the original demand zone that we looked at. And we're going to play the invalidation around 1 to 2x that. Now, I would say 2% is perfect for this level. So you would put, just fix that right there. You're going to put a little bit of your bids towards the top, heavies towards the bottom. And what are you going to do? You're going to sit back, relax, and allow the price to just move where it wants to go. And look at that reaction. I mean, just picture perfect. Like, this is just picture perfect. This is a beautiful demand zone. It retests right away, bounces right out of it. Very small invalidation, very small level to DCA. So it's not like, you can put literally 3 entries here, 1, 2, 3, and have almost all those entries filled, or place 10, have majority of those levels filled. I mean, this is just a picture perfect demand zone, especially like just a reaction out of it. And then you're gonna see this level does not retest. It comes close, but does not retest. And then from this move up, it's gonna spark a plethora of different demand zones, and we're gonna play every single one of them together. So we got a beautiful reaction out of there. I mean, from the peak going to that wick to this is a 17.2% move. And we're playing these on leverage. Remember, this is leverage plays, right? This is 1-2% ranges to these 1 to 3% ranges to DCA, maybe a little bit more, maybe a little bit less at times. And your invalidation is about the same, right? So it's like you're playing good plays and you're aiming for these type of gains. You're aiming for a good, let's say if you're playing a 3% invalidation, you're going to aim for a good 5-6% gain before you take your first TP. And you're going to aim for that 12%, 14%, 15%. So now we have a fresh demand zone right here. And it's a good thing I called that right before the price came down to it, because that's where it's getting attracted to. So you're going to draw your rectangle and you're willing to bid demand because you had an impulse to move up, right? Followed by a little bit of resistance in the price. People willing to bid right here, which is the reason why price impulses out of this block, creating your demand zone of which you're willing to bid. Small to the top, heavy to the bottom. And now we're going to see how price reacts. Bam. All right. So for this one, we didn't get most of our bids filled. We got a little bit of our entry filled, but that's okay. We still have exposure to the market, and you're not always going to get every entry filled. That's the reason why you DCA. And you can see here, there's a little bit of a demand zone here. I don't know if this one holds or not, but it definitely is a level of interest. If you're looking to play demand, you got to play them all, and this is definitely one of them. But you can see right here, with this demand zone, we sliced through it a little bit. So technically, like I said, it's technically an invalid demand zone, but we played it. So we're fully in this demand zone as well, right? Look at that. I mean, just look at that. I mean, slices through just a little bit, teases, and you get right back out. So with this one in specific, it would have been about a 1.5% range, which means, I would have probably kept my stop loss about, let's say about 2.5%. We didn't even need that. But you see, the wick came slightly below. Wanted to trick people out before actually going up. And again, we're playing every demand zone. So this could have been a loss. I wasn't sure exactly how that one would have reacted, but that's the way you do it. You play your demand zones when you see them. Just like up here, we get impulse to move up, a little bit of resistance puts the price down, people willing to enter around here, and we got a fresh demand zone. So what are we going to do? Again, we're going to draw our rectangle. And now we have our level of interest, of which we put most to the top, heaviest to the bottom, and we just allow price to do its thing. And then from there, we would have taken an L on this 4-hour demand zone. But we were also being a little bit more aggressive in the price. You could see we were aiming for it towards the top end of the range. So you always want to keep into account of exactly where you're trading at. But, we're not perfect. When we see a 4-hour demand zone like this print, especially after an impulsive break, it's a level of interest, right? We have plenty of gains to suffice for the losses on these type of plays. And on the level that it retests, it comes down and retests our level of demand down here. So you can obviously play that again if you'd like to. And I'm just going to kind of remove these right there. This was a successful play right here. This was a losing play right here. just going to kind of let things develop from here. So this one's kind of happening, and I missed it slightly. Bam, we got a demand zone right there. Impulsive move up, a little bit of resistance push price down. People willing to purchase on this pullback, which is the reason why price impulses. And with this one, you could have more conviction in entering this demand zone. Even though this demand zone is right next to the demand zone we just took an L from, you could enter this one and have more conviction in entering it. Why? Because we broke the range now. Right here, we didn't technically break the range, so it's a little bit more aggressive of an entry, which is fine. We have our risk management in place, and we have a lot more R to look forward to than the 2% we would have taken. And then we look to enter this demand zone. So a little bit at the top, heavy towards the bottom, and you would have got a full fill right here. Full fill. It would have retested one time before moving up, coming back down to retest the whole thing. How you play the demand zone is completely up to you. If you want to move your stop loss into profit after this move up, you're more than welcome to. It's completely up to you. But a lot of the time, you just want to allow these plays to play out. Even though that was a 4% gain, again, we're going to measure the demand zone. And that's about a 1.6, 1.7% range to DCA, meaning that we're probably going to have about a 2.5% to 3% invalidation below that. So your invalidation is still intact as long as the demand zone is holding. And as long as that demand zone does not slice, it's technically valid. And even if it slices, just like you saw around this reaction right here, it's still going to, there's still a possible reaction from it. And the confluence you have is that we broke the range. So, we're going to tie in confluence with this demand. And this is kind of how I want to go about things. I don't want to go on a whole another lesson about range right now. Look forward to that in the future. But for now, we have this demand reaction, hold, and break. So now we move our stop loss after the whole, and we move through it. Look at the reaction that comes from it. I mean, just beautiful. It's beautiful stuff. And then the next level that we're going to look at of interest, this one's a little bit harder to see, but it is a level of demand. We get an impulse to move up right here, followed by a little bit of resistance in the price to push the price down. Then you have your demand zone printed. You could tie in a few other things right here. The higher you go, you want to be tying in a little bit more confluence because we're not as low as we were before. And now every leg up is into resistance. Every leg up is into resistance. So you're going to want to be tying in some confluences. The confluence you tie in is completely up to you. You can look at RSI, you can look at your OBVs, you can look at the range breaks, retests, lick wicks, SFPs, chart patterns, whatever, reversal patterns. And what I see here, I see a little bit of an inverse head and shoulder in confluence with the demand zone. With the range break, this gives me confluence to enter around this area. And we see the demand zone. And we're playing our 4-hour demand levels. It's been working clearly up until this point. We've taken one small L along the way. And this is where we're interested in bidding. So this is where we're going to have our bids. And let's see how price reacts around here. See if we even get the entry. Bam. We got filled. Beautiful. Perfect. This is a successful trade. Even though we didn't get the full level tested, we got, let's say, half our bids filled and a beautiful entry. It's above the high that brought us to the low. That's a successful trade in my books all day. That's a successful trade all day long. And this is the type of reaction you want to see out of a demand zone. All day long, I would take this trade all day. You would measure the box. That's about let's call it 2%. And with this one, I would play it a little bit looser just because we're higher up. So the reactions might get a little bit violent. So I would play it into our previous demand zone because we have a demand zone right here. And because this range is about 2%, I would do about a 3% invalidation. And we have the cushion, a little bit of protection with the demand under. So if it slices through a little bit, we still have this cushion of, let's say, range demand being tested. And that was tested that you can play off of. So now begins to get a little bit sketchy. Why? Because now, like I said, every leg up's into resistance, and now we don't know if we're topping or not, but you could see that the demands are getting a little bit sketchy when you play them. We're being retested twice. We're creating a little bit of these smaller pockets. So we have this impulsive break up, and we get this demand print right here and this demand print right here. There's two clear demands print right here, right on top of each other. How I would play this is I would just put a rectangle on top right through both and treat this as one demand zone because this is technically level of demand. And as a demand trader, especially on the 4-hour, these are your opportunities. There's a handful of trades you can take trading 4-hour demands in this uptrend, and you got to capitalize on every single one of them. Even if you're going to potentially take a loss, which you can with every single one of these trades, you're going to have to capitalize on this as well because this falls in line with a demand zone. So you put, again, slightest to the top, heaviest to the bottom, and just let price do its thing. And with this box in specific, I think it's about a 2% if I'm not mistaken. Yeah, this level's a 1.7% range. So with this one, I mean, like I said, you're closer to resistance. We would play it like how we did this one, a little bit more sketchier. So because it's a 1.7%, I would go to below this wick right here. So about a 2.8% invalidation on this trade right here. And with this trade, you're gonna see slices. It's gonna slice right through it. I know this reaction. Bam. It's gonna slice right through it, but it's gonna hold our entry. So our invalidation was 2.8% below this wick. I chose that. I like that invalidation. That's the way that I go about things. You could have gotten taken out of this play if you played it tighter, obviously. But this is what happened. What happened here is it cascaded through the demand, meaning that either it took people with tight invalidation. Let's say people played this demand zone with a tight invalidation right here, took them out of their play completely, grabbed liquidity around this level, and continued up. Right? That's all that happened here. And what this means to me, when I see a 4-hour demand zone, a reaction happen like this after getting multiple legs up in an uptrend, this to me is where I'm going to begin to preach caution, is where I'm not going to be looking to long as aggressive. I'm going to be looking for more of a reversal to happen. We're in an uptrend. We've secured very nice profit. This is where our demand zone here, we're looking to secure massive profit off of. If we're still in this position where we've secured it, right? We secured majority of it already. This is where you do that because now we've sliced through a fresh demand. Now it's kind of looking like, okay, these demand levels people aren't having as much confidence in, and you're the one playing with them, right? You follow the whales. The whales are looking for demands on the way up, and you're playing with them. So now you could see it's clearly not working out how it once was. So now you just want to preach a little bit of caution, and this is what it means to me. But we still have this play, and we're still in it, and now we're in profit. What I would do right here, immediately move your stops risk-free because of the reaction that happened. It's technically not even valid anymore, but we have all our entries. We're in profit. We got a winning trade. We got a winning trade. So you manage risk from here, and then eventually it'll chop around before it cascades and tops out, I believe. Bam. And that's how you play demand. That is every example of demand that I wanted to show you from ETH in this move up from 2021. Just to put it into perspective, you can see the plays that you were able to get on this move up, right? On the 4-hour, we're looking for fresh demand zones. I don't think I missed one as far as the way that I'm showing you guys, right? You got this one right here, bam. You got this one right here, bam. You got this one right here, beautiful. You had this one right here that we played, beautiful. And then you had this one loss. Cool, whatever. We know why we took a loss. We reflected on that. This was the top end of the range. We were being a little too aggressive. We saw an inverse head and shoulder, so I did like it, right? I was a little bit aggressive, but we played that there. And then we played this one just slightly too aggressive. This is what it is. Comes down, retest our zone. Cool. We're up here. Fresh demand zone. Beautiful. Fresh demand zone. Beautiful. And then even though this sliced through up here, we still got a winning trade out of it. Any questions? Leave them in the comments. Let me know, guys. See you guys in the next video. Peace.